I'm Allie Canal, and you're taking a look at a live shot of the opening bells on Wall Street this Tuesday morning. Trane Technologies ringing the bell at the New York Stock Exchange today. And over at the NASDAQ, CNBC is celebrating 30 years of Squawk Box with a special bell ringing of its own. This as traders await a revision to jobs numbers that could shape future Fed policy, along with Apple's anticipated iPhone event. Now, opening bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks and giving you the unbeatable context to make decisions with your money. Let's get a quick check on the major averages as we kick off trading and send it down to our very own Brooke DePalma, live from the NASDAQ in Times Square. Brooke, what are you seeing this morning?
Good morning, Allie. Right now we're seeing all three major indices kick off the day in the green. Right now we have the NASDAQ holding on to that momentum after Broadcom and NVIDIA led the NASDAQ to a record high on Monday's close. S&P 500 also holding on to the momentum there. We are seeing the S&P 500 open up about 0.07%. The Dow opening up about 0.04%, and once again the Nasdaq up about 0.2% in the open. After we saw that downward momentum on Friday to end the week, we are seeing this bit of a rally here, as we are expected to hear from other tech-led companies like Oracle. Largely, investors are looking for their AI-related guidance, especially after that deal with OpenAI, and also that report from GameStop. Of course, they're expected to hear more about hardware that's really driving that business. But if we take a closer look at the NASDAQ 100 this morning, we do have Broadcom holding on to that momentum after that rally that we saw, especially on Friday during that market trading session. That stock up over the past 4 days is up more than 15%, and now in the open up about 0.7%. We also have Microsoft leading gains up about 0.6%. Meta and NVIDIA just slightly up. Important to note out here, Netflix moving higher as well, up about 1%. So right now we're seeing a bit of a mixed picture here right now, but the Mag 7 certainly seeing just a bit of momentum as we switch a little bit on and off, mostly flat. Once again, taking a step back, all three major indices opening up in the green, and the NASDAQ looking to hold on to that momentum this morning.
Yes, we'll see if the NASDAQ can hit yet another record high. Brooke, thanks so much. We're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what we're watching. Number one, markets remain near record highs after the NASDAQ hit new heights on Monday, but could bubble risks be building? The tech rally rolls on, yet heavy concentration in just a handful of stocks may pose challenges for investors. Number two, traders are now almost certain the Fed will cut rates at next week's September meeting, but could easing in today's environment backfire, posing risks for stocks or even fueling a market melt-up? And number three, the U.S. is still working through trade negotiations with talks on a South Korea deal reportedly stalled over currency concerns. All this coming as markets await the Supreme Court's ruling on whether the president's sweeping reciprocal tariffs can move forward. Here to break it all down, Michael O'Rourke, Chief Market Strategist at Jones Trading, along with Yahoo Finance senior reporters Brooke DePalma and Inez Ferre. And Michael, I want to start with you, where stocks are trading, NASDAQ at record highs. But you say we are entering bubble territory here. So why is that? What's that perspective from your point?
So if you look at the S&P 500 plus all the crypto instruments out there, we're probably at 200% of GDP as far as their valuation. It's somewhere around $60 trillion. So that, when you think of the dot-com bubble back in 2000 when it peaked, the S&P 500 alone was about 120% of GDP, 125%. So while the S&P got, I believe, to 175% back at the end of 2021, there's a lot of excitement out there, and again, it's driven by these the mega cap Mag 7 names, which are great companies, but they also trade at expensive valuations for such large companies. And then when you add the crypto speculation in there, where these are non-cash flow investments and just speculations, it definitely indicates we're in a very frothy environment.
Well, let's talk about some of that crypto speculation here, Michael, because we did see ACO surge nearly 3,000% after announcing it would flip its balance sheet into a warehouse for WorldCoin, other digital assets. I guess, does that remind you of the frothiness that you were just speaking to, or does it signal that crypto, the momentum is here and it's here to stay?
This is far in excess of the extremes we saw back in 1999 and 2000. I mean, that ACO settled yesterday about 34 times the NAV of the $250 million the sponsors of that deal invested. And basically, in order for that, these crypto treasuries to execute their strategy, they have to sell shares to the public and at the market offerings. So when the shares rally as they have, the company comes out and sells into the excitement. And again, that dilutes, the shareholders are paying well above net, or the public's paying well above net asset value for the stock. And, it's going to be tough for them to, earn their money back. So I think I don't understand why investors would go pay for the equity rather than the underlying digital asset, which they could pay straight up for.
And we have seen crypto, a lot of speculative tech rising in recent weeks on the heels of this rally. But Inez, we have seen crypto pull back over the past month. And I've been reading commentary about how it's might be bearish for the crypto space if the Fed cuts rates, because that means the economy is weakening. What have you been hearing on the street, and how does that tie into the moves that we've been seeing in other commodities like gold?
Yeah, so keep in mind that September tends to be a volatile month for crypto. It tends to be a weaker month for crypto. You have seen, as you mentioned, gold going higher because of Fed easing expectations. There's also been a sort of flee from fiat currencies into assets like gold, and also Bitcoin as well. I mean, you have seen Bitcoin at around 112,000. It's been in a consolidation period, but gold has definitely been the front runner. And Wall Street, there's some analysts out on the street that also talk about the fact that you tend to see gold front running Bitcoin historically. So it'll be gold first, and then it'll be Bitcoin that will sort of catch up. And that may be what happens if history's any guide in October, because historically October tends to be a better return for assets like Bitcoin. But certainly when you're looking at gold prices right now, you are seeing some analysts talking about gold being in overbought territory. It'll be interesting to see what the inflation print comes out to be, because if it does come in soft, then you could see bets for a 50 basis point cut go higher rather than just a 25 basis point. And so then you may see the dollar going lower and then gold going higher. But look, if the dollar continues to stay weak, then this tends to be positive for assets like gold and also like crypto.
And as you mentioned, that inflation data coming out later this week, but we also have job revisions set to come out in just around a half hour. Brooke, what are the expectations for this, and how does this change the Fed's calculus, if at all, when it comes to that September rate cut, but even looking out towards the end of the year?
Yeah, well, right now, economists are really baking in a revision between 600 to 900,000 fewer jobs added over the past 12 months. Right now, according to Bloomberg consensus data, we're looking at the number, according to the expectations, coming around 682,000 less, once again, added over the last 2 months. And this will be the second year of pretty sizable revisions should this come to fruition. And what we know is that economists at JP Morgan, Nomura, Bank of America, Royal Bank of Canada, they're even speculating that we could see a downgrade of even closer to 1 million less jobs added to the overall U.S. economy in the past year. And that could largely signal a weaker overall economy, weaker labor market as well. And we know that President Trump has been quite critical of the Bureau of Labor Statistics, calling for a more accurate and better data collection method. And so we likely will hear from President Trump based upon where these revisions ultimately end up going. And also we know that what we've heard, based upon experts from Bank of America, they say that this also could lead to, or rather a larger revision, could also show that we did see a stalled labor market in early 2025, something that we didn't see earlier this year, but these revisions could highlight that. And then big picture, taking a step back, the Federal Reserve will be closely watching these as well. Of course, President Trump has been quite critical of the Federal Reserve if they were too late to cut interest rates. And so right now, while we are baking in a quarter-point cut at next week's meeting, this could ultimately lead to larger rate cuts coming as well. And right now, economists are saying that a 50 point base cut could also be on the table based on these numbers as well.
Yeah, and the jobs market has also been hit by a lot of tariff uncertainty. Industries exposed to trade have actually now turned negative. And Michael, on that front, we've seen talks stall between the U.S. and South Korea. But do markets care? Has geopolitical risk essentially been priced out at this point?
This way, the market is ignoring it. I agree with that point. And I think that goes into the frothiness of the tape. People like the fact that the president is cheerleading the markets and obviously, pushing for rate cuts. Even, no matter what happens with the economic data here, the expectation is come May, we'll have a new Fed chairman who'll be more dovish. And this has been the thinking for the past 6 months. So we have this we've had this really dovish environment, with the only hiccup being the post-Liberation Day sell-off, and the president reversed course tariffs at least temporarily after that, and now is more easing them in. So I think that's a lot of the excitement we're seeing in the market. And the trade deals will matter. It just takes much more time to see the real effects of those deals or lack of deals play out.
Mm-hmm. Well, investors will have their eye on one upcoming event, that is the Apple iPhone event. Shares are down around 5%, mostly due to the fact that Apple has lagged that AI race. But Brooke, you cover the consumer closely, and really iPhones for Apple, that drives the business. Considering where we're at with the economy, do you expect consumers to really buy into this latest cycle here for Apple?
Yeah, well, it seems like iPhone got all the attention back in April based upon what the implications of those tariffs would be and how much more it could cost. And now based upon these new products that Apple is expected to put out at today's event, that iPhone Pro Max, the iPhone 17 Air, they're expected to be between $50 to $100 more. Even Bank of America is saying that they could be priced $100 more based upon that Plus model, the bigger, larger model. And what I'm hearing right now from sources that I've spoken to this morning is that consumers could ultimately lean into this AI upgrades that Apple could put out today. Of course, we know that artificial intelligence really is driving momentum around innovation and newness that drives consumers to spend. Of course, too, as the consumers are really trying to pull back and focus in on where exactly to spend, we know that sometimes iPhone costs are offset by businesses and corporations in terms of their use. But Dan Ives at Wedbush largely saying that their AI strategy, we did see the possibility that this could reinvigorate the iPhone upgrade cycle. Exactly how Apple plays that out remains to be seen, but this is largely what he calls the elephant in the room. He said that the biggest consumer installed base in the world of 2.4 billion iOS devices and 1.5 billion iPhones largely was led by that AI upgrade to consumers leaning into that. And so really, the elephant in the room, will consumers upgrade their iPhones because they want the latest AI?
Well, finally, Michael, going back to your earlier point on market concentration and the frothiness within the current equity landscape with big tech high, where are those undervalued pockets of the market? Is Apple one of those, considering it has lagged the broader index?
It's lagged, but also it probably has had the most headwinds of the Mag 7 names. I think the better way to describe it is the concentration where there's the Mag 7 names in technology in the broader market has pushed valuations down of more traditional companies. And same thing, you see the same thing in the drug space as well, where, for the past 5 years, Lilly and Novo, due to their GLP-1 drugs, have, had been the winners. Obviously, Novo has been correcting for the past couple of years. And that pushed valuations down among the other large pharma names. So I think that's how investors should be looking at the tape is if you don't look at what's getting all the attention, you'll actually find some bargains out there among high quality blue chip names that are household names. You just have to look beyond the headlines.
Look beyond the headlines, and I'm sure we'll be getting a lot of headlines out of Cupertino later today. Michael O'Rourke, Brooke DePalma, Inez Ferre, thanks so much for joining me this morning. We'll be back with the SailPoint founder and CEO Mark McLean after the break on Opening Bid. Shares of SailPoint trading lower after the company reported earnings for the latest quarter, despite raising its outlook for the full year. I want to bring in Yahoo Finance executive editor Brian Sazi, joining us from the Goldman Sachs Communacopia and Technology Conference in San Francisco, along with Mark McClain, the SailPoint founder and CEO. And Brian, I'm going to kick it over to you to get this conversation started.
All right, thanks so much, Allie. Mark, good to see you. I was just listening to you on your earnings call here. The stock a little bit under pressure. And look, full stop, I don't get it. And you came out here, beat on earnings, raised your full year outlook. You sounded strong in the earnings call in terms of demand. What's the street concerned about, you think?
I think it's just the Q3 guide is my sense, Brian. Thanks. And by the way, good to see you. Better when we're in the same place, as you and I have commented before. But yeah, like at the end of the day, I think we kind of tried to make sure, and I think some of this may work its way out in the day and the coming days, but we tried to signal pretty strong sense that the business is very healthy, growing nicely, raised our full year outlook. Sometimes you get into these comparisons, sometimes you get into other technical dynamics that trading systems are looking at. But I think we certainly are trying to convey the sense we have is that this is a strong, growing business with increasing demand based on what's happening in the world of machine identities and agents, and that we feel very good about our position and where we're at and how things are going.
Mark, I'm glad you mentioned agents, because out of every conversation I've had here at this Goldman Sachs Tech Conference the past, 12, 15 hours, whatever it is, agent has been mentioned in every single one. How does your business play in agents? And are they increasing cybersecurity risk for big companies?
Short answer, yes. And yeah, Brian, I agree. It's hard to have it's like back in the days of mobile or the internet itself. It's hard to have any conversation that doesn't move to agents fairly quickly these days, isn't it? And I think we absolutely believe it's the classic double-edged sword of technology vis-a-vis us and the security landscape, meaning these agents and the agentic technology that's coming both from the vendors, the big players like Salesforce and Workday and others, ServiceNow, and those being built in a lot of mid to larger companies that have their own development shops. There's a wave coming. Matter of fact, we know tons of pilots and experiments are going on. Part of what's happening, though, and you're reading a little about this, there's a little bit of hesitation, and I think it is the emergence of some of these risk concerns that exactly is what's behind that. Companies are recognizing that if you don't have very good visibility and control over who has authorized or what is authorized these agents, and make sure that the data they're accessing as they go about their work is in fact what you want them to access and not being returned to a user or an entity that shouldn't see it, you have some exposure there. And so people are rapidly wanting to deploy agents as a way to enhance the productivity, effectiveness, efficiency, all those good business words on their business. But they're increasingly cognizant of the risk, and they want to make sure they have an ability to manage that risk well. That's where SailPoint and others come in to help them address that.
Mark, you mentioned on the earnings call about halfway through, you have a new product or series of products that will focus on agents. Can you tell us a little more about it? Because that might go a long way at getting the stock going the other direction here today.
Thanks, Brian. Yeah, love to get that stock moving the right way. We think it will. But look, I think at the end of the day, there's a couple of new challenges that are different in this non-human world, right? There's these machine identities, and agents, depending on who you talk to, are either kind of a different class of machines or just altogether a different category. We've chosen to put them in a different category. But one of the challenges of all these new non-human technologies is two disciplines that are a little unusual, not common from our heritage of humans, which is you have to discover them or inventory them, and you have to assign them to a human. Meaning, if this is a piece of technology, right, a software bot or now an agent or something like that, you have to know how many of them you have, how many have been created, have they created others. One of the apparent capabilities of some of these very sophisticated agent technologies is they can spin up sub-agents to go off and do pieces of work for them. Well, that's another identity. And so you have to have visibility and understanding of where these things are, what they're designed to do. And you have to always ensure that there's some person in the organization that's taking responsibility for that. We've joked about, imagine the lawsuit where you're trying to bring a lawsuit against an agent for something it did. No, a lawsuit will always get to a person or a company ultimately, right? In other words, these things are going to take action, perform work for the organization in the technology landscape. You have to know what they're supposed to be doing and who's responsible for that. Then you have to make sure they are all the things human identities are. They're currently configured correctly. They're performing the actions you expect. There's no evidence they've been compromised and something bad is happening. Those are the disciplines we've known about for a long time in the identity landscape. We just have to apply those to agents and machines. And the tricky part is you got to find them and make sure you know who owns them.
expansion of its training program, Identity University, to help bridge the gap with some of those cybersecurity skills. And I'm curious, from your vantage point, when it comes to your partners, your customers, how big of a gap is that skill set for some of these workers, especially since we've seen a lot of labor market pressure throughout a ton of industries out there?
Yeah, great question. I think we really are seeing that, and I would say that's pretty common across the whole security landscape. I think you just hear consistently from mid to larger customers that they're concerned about the availability of trained and skilled resources. So there's multiple things going on there. All of us are looking to leverage AI technology. Back to Brian's question, we're also trying to leverage that internally, as are many of our compatriots, trying to leverage that technology, right? On the other hand, we know that we just need more humans that are trained and skilled in these disciplines. So yeah, we've kind of thrown the doors open. We used to, like many vendors, kind of keep that for our community only that were using or purchased our products. Now we're saying, look, we'd love to upskill many people around the world. So here's an opportunity to just learn more about the identity landscape, the kind of disciplines we're focused on, and get yourself grounded in those concepts. Now you can move up from there. So we've seen a lot of uptick in just the broader community interest in this security landscape, particularly identity security. And that was our move to kind of make that even more broadly available.
And how about the AI element of it all? How are you using AI to help bridge this gap? And are we at a point where AI can replace some of these workers, or is it more so just augmenting some of those skills?
Yeah, you used my favorite word there. I tend to unpack the AI acronym more with augment than artificial, because I think in many cases, we're going to find that this technology comes alongside and makes people more productive or more efficient. I think in some cases it will completely remove some pieces of work, but I think some of those claims were the most overblown initially. Although I put people to like an automotive factory. I'm not in that business, obviously. Like if you look at an automotive factory 80 years ago, there's a lot of humans. Today you look at one, there's a few humans and a lot of technology building cars. Well, I think we're going to see some displacement of some of the human efforts here, but in most cases, most organizations have so many needs for analytics and for better efficiency. I think they're going to leverage this technology to make their people better and more effective, far more than they're going to just absolutely replace people. So we're leaning in on how does this technology help our company, our customers, and our customers' customers, if you will, be more effective and better. That's the way we're leaning in on AI.
Mark, in about 20 minutes, I'm live at this conference with CrowdStrike CEO George Kurtz. It's been a year since their big outage that impacted really the whole world. Have you taken business from CrowdStrike as a result of that outage, and what are you doing differently versus them?
No, CrowdStrike is really complementary to us in pretty much every respect. Their focus has been that core device security, and then a rich set of things to look for threats, manage threats, alert to threats, block threats. What everybody, though, is recognizing, and we are in dialogue with them and many others around the industry about the challenge in so much of the security ecosystem today is it's identity unaware, to be a little harsher, identity blind, right? Like so many of the tools that we've built for network security, cloud security, device security, they are focused on that domain, if you will. But always what we're learning is there's some identity, human or now possibly non-human, that's trying to access data through that device, over that network in the cloud. We need to understand that identity context. So a lot of our efforts are to tie together the identity and the data, like who or what is this identity, what data is it trying to access or act on, and now expose that bidirectionally with the security ecosystem. If they see a threat, they want to get the identity context of what's happening there. If we see changes in the identity context, we want to alert them that something might be going on that they need to look for, right? So in both cases, it's kind of a bidirectional sharing. So no, CrowdStrike's outage, while unfortunate, I think they recovered from it unbelievably well, and I think they would be much more complementary to us.
Mark McLean, SailPoint founder and CEO, thanks so much for joining us. Of course, Brian Sozzi as well, all the way out in California. Appreciate you both.
Appreciate it. Thank you.
Coming up, Yahoo Finance's Market Catalyst. We're bringing you the news behind the market moves for the trading day. You won't want to miss it.